So I think we got some things that are working for us this morning. Let's go to Kevin Hincks at the CBO, host of Fast Market. Tell me about the data this morning, Kev. Seems like yesterday's CPI went decently well in terms of the number. It seems like PPI also providing maybe a little bit of inflation relief.
Exactly right, Oliver. You know, PPI, we'll all admit in the beginning, is not the same effect on the markets that CPI does. But that said, these numbers were extremely positive for the fight against inflation. Here they are, Oliver. PPI headline month over month, unchanged, down from 0.4 to unchanged. That's 0.3 lower than expected. Year over year, 3.5 to 3.2%. That's 0.3 in a month. Core PPI month over month from 0.3 to negative 0.1%. So think about that. Actually negative prices at the producer price level. Core PPE year over year, 3.6 to 3.4%. Ex-food and energy trade services up 0.2, and ex-food and energy trade services year over year from 3.4 to 3.3%. Oliver, here's the details, and it's something we've been pounding the table on now for a month and a half. Final demand goods were up 0.3, final demand services down 0.2. Chicken eggs, Oliver, up 53% during the month. That's 2/3 of the gain in final demand goods. What was the other side? Gasoline prices, like we've been talking about. Look at crude oil futures. Gasoline prices down 4.7% in the last month. So that offsets eggs in this number. Final demand services, again, down 0.2. Final demand trade services down 1%, Oliver. So solid numbers across the board if you're thinking about inflation. And here's the thing no one's talking about. I'm surprised that March rate cut is not on the table, or at least bumping up. There's zero chance right now in the CME futures. I'm frankly surprised at that. Now, let's keep going.
Well, if you want
jobless
that,
claims.
root for stocks to keep getting hit. You want that cut in March, then keep rooting for stocks to go down, basically. That's a pretty good path to getting it.
Well, Jerome Powell has never looked at stocks, but the data is telling him that he has a window, in my opinion. It's the data, it's inflation that's coming down. If you want to continue with a soft landing, I think the rates have to come sooner, not later. Right now, it looks like it's built in for June, but I check the FedWatch data every day. There's no movement in March. So it looks like from that perspective, it's off the table. But I'm surprised it is, Oliver, frankly, based on these numbers. And remember, we're in the Fed quiet period. So there's no real comment that's going to be made.
Yeah.
Let's also go with this, Oliver. Jobless claims from 221,000 to 220,000. Another week, another strong first-time filers for unemployment insurance, Oliver.
You know, the potential for a March cut's a fun thing to think about, roll over in your mind a little bit. I mean, if you're looking at 200,000 still roughly jobless claims, low 200s, it seems like even after the last couple of weeks of there being a lot of chatter about slowdown, et cetera, that jobs from both the employment report and from our jobless claims, JOLTS too, all the employment data is pretty solid.
Pretty solid is right. I mean, right. Obviously, what we've seen this week is several things, right? The tariff chatter is getting louder and louder. I think that's why you're seeing stocks hesitant to start the day, even though they're starting to inch back towards unchanged now. It's getting louder and louder. Usually what that means when it gets really loud is they're about to make a deal, and the rhetoric keeps getting louder and louder before they make a deal. Either that or the entire trade conversation breaks down, which I just don't think is going to happen. The other thing is, when you're looking at the overall data and economy and stock market, if you want to continue the soft landing in this economy, you have to adjust rates as inflation is coming down. And clearly, in these two data points, CPI and PPI, inflation is coming down, Oliver. And then, like I said, and then you're getting comments from CEOs like Ed Bastian talking about, remember, he's talking about them being transitory. They're keeping their full year guidance in for like Delta Airlines and some other firms, but they are talking about a little slow period right now.
Okay. Kev, later on today, we're going to get bonds on the long end auction. How do you think that goes, and how do you think the data should relate to bonds? Because we have had a two-way trade going. Treasuries have had a little bit of a battle here around the 4.2. I mean, it seems like the message from bonds is that these data are good enough to provide some relief to some of that Treasury buying that was associated with both stock selling and concerns about the economy.
Yeah, you made a point right at the beginning of the show where some of the bond buying that was the fear of slowdowns, and it seems to be dissipating. It looks like some of the bonds got overbought. So now on favorable economic data or lower inflation, you would think yields would be going down, but they're actually firming up here. Why? Because the U.S. economy is coming out of this looking in a better place, I think, than a lot of people are alluding to. Remember, you're getting a lot of sentiment data that is skewing political. How important is consumer sentiment tomorrow? I don't know. Can we trust this number if it skews political? I don't know, but it's going to be a pretty important number that the market will probably react to. Remember, that number went up to a 4.2% inflation. With these numbers, someone's got it really wrong, Oliver.
Yeah, all right. Appreciate the thoughts, Kev. Appreciate the analysis. Noted. Dove, Kevin Hincks, looking for a March rate cut. Okay.